Hello guys and welcome to today's um, trade identification bias. Sorry guys, I did ended up entering this trade a little bit too early. Not too early, but the video that I've made, I'm doing the record that I'm doing is a little bit too late. I just got home and I found a trade and I didn't have the time to record the process of me looking at the trade. So now I'm going to explain it for you. So please, without further ado, don't forget to smash up the like button and to hit the subscribe button to let us reach 220 legends before the end of May. And I'm pretty sure that we can make it, guys. So let's get started into today's video. So for me going into the day, I had a overall bearish bias due to the daily being bearish. So let's get started with the daily time frame. So the daily time frame, we are still trading in a bearish order flow. We also have a lot of low resistance draws on liquidity to the downside, and we still have these daily lows as well. So with that, if we scale down to the 4-hour time frame, you can see also that we are trading in a downtrend on the 4 hours. So what we have is basically like yesterday we just swept up all of the liquidity to the upside, and now we have these 4-hour lows got swept on London session. Also we have these lows and these lows, and also we have these 4-hour lows and those 4-hour lows as well. So the daily is bearish, the 4-hour is bearish. Now if we go into the hourly time frame to look for it up, so what do we have? We have these Asian session highs. We also have these Asian session lows get swept and potentially have a setup to go into a long, but as I said before, I will never enter into a long unless the trend is bullish. So the trend is bearish, so there is no reason for me to enter a long. That's why, if we have these highs, we also have this breaker block. We have these London session lows. If we go to the 15-minute now, hold on. Right when London session opened, we come up, we took out those the Asian session highs. For me, that's a 4-hour liquidity sweep. Also on the hourly, it looks like also we have a liquidity sweep aligned with the bearish breaker block and the sweep of liquidity also on the hourly time frame. So with that, I scaled down to the 5-minute, 15-minute to look for a breakout structure. So I waited for this. We broke the structure on the 15-minute. Then I wanted to wait to see this 15-minute fair value gap got invalidated, and that literally what happened. After that, I scaled down to the 5-minute time frame, and as you can see, I waited for this candle to close below this low. So we broke this. We did a market structure shift on the 5-minute also, and we have this order block that turned into a breaker block, and we also have created this bearish fair value gap. I didn't want to enter right here because I knew that this is an order block and price could reverse it back into the fair value gap. So what I did is actually waiting for the fair value gap to get filled. So once price pulled back, we retraced back into the breaker block and the fair value gap, and then I scaled out to the 1-minute time frame. And as soon as we invalidate this 1-minute bearish fair value gap, also we filled out this 1-minute bearish fair value gap, and what I wanted to see next is invalidation of this bullish 1-minute fair value gap. And as soon as we did that, I jumped into the trade literally immediately. So my stop loss, also my trade originally was to enter right here, but then price ended up moving a little bit too fast and I couldn't catch a good entry. So I basically entered a little bit too late, and that's it. My stop loss is above these 5-minute highs, I guess. Yeah, above these 5-minute highs. I should have put my stop loss at this liquidity sweep highs, but then that will give me a much lower risk to reward ratio. So that's why I put in my stop loss right there. Also, it should be protected because those are the 5-minute highs that if price goes above them, the trade idea will be invalidated. Also on the 5-minute now, we just broke the structure to the downside right here. We did a market structure shift. After that, what we have these London session lows and even these lows as a draws on liquidity. Also, you may see this blue line marked out right here. That is my 50% mark of this 15-minute fair value gap. So yeah, that's it. For the first place, I was about to set on 2 TPs split but then I didn't want to, and I didn't like the risk to reward that this position size is going to get me, but that's why I waited. And my final TP will be at these London session lows. So that's it for today's market recap, or not a market recap, trade identification bias. Sorry guys, it's a little bit too late. I usually do it before I even like the session opened, but this week I had a lot of exams and I was at school, so that is cool. Now we are in this order block, and we are just waiting. I'm going to go off of the charts because I have a lot of things to do also. And yeah, that's it. I hope this trade turned out to be a winner, and that's it. A sweep of liquidity, a break of structure on the 15-minute, retracing back into 5-minute continuation confluences, breaker block, fair value gap, and then a break of structure on the 1-minute. This is my A plus setup that I always trade. Also a downtrend, not an uptrend. That's it. I hope this trade could be a runner. Also, there is something that we need to be careful of, because today we actually have a little bit of news. So hold on. As you can see, flash manufacturing PMI at 2:45 p.m. Also, employment claims has already happened at 1:30. Also, I want to mention something that we already the time has changed, and we are no longer like a London session open at 9. It's open at 8 a.m. right now, and New York session open at 1 p.m. instead of 2 p.m. So you gotta be careful for that one, because a lot of traders do not notice that difference, but it makes a lot of difference, to be honest, because the session liquidity is something very used, and I already show you the results of the last video of what is the impact of the session highs and the session lows. So that's it for today's trade identification bias. I'll hit you guys up with the next video, which is the trade recap. Whether this trade loses or wins, I'm going to post that regardless. Transparency is the key. So that's it for today's video. I hope you guys benefited from this video. Hope you guys enjoyed. Make sure you guys leave a like and subscribe, and peace out. See you next one. Peace.